I'd like to thank TradeTech for organizing the event today, and also BNP Paribas for the very enjoyable cocktail reception last night. I'm here to talk about how you can leverage networks to successfully execute FX trading strategies, and some of this ties into what you heard in the keynote just now about the evolution of trading technologies, and networks play a critical role in the execution of FX trading strategies. And as all of you know, FX is the biggest asset class in the world, over $5 trillion in daily turnover, and more prop shops and hedge funds are participating in the markets. And what we have done at IPC is to talk to our customers, sell-side firms, as well as hedge funds and other buy-side firms, about what they're seeing in the marketplace, the trends that they're seeing in the marketplace. And what I wanted to do today was to share some of those insights and what we are hearing from our customers, not just the buy sides and sell sides. We're also talking to liquidity venues and market data vendors, everyone across the capital markets. And I wanted to share those insights with you and what their challenges are. And when we talk to our customers, especially the buy side, two things really popped out. The first is the need for connectivity throughout the trade life cycle. Market participants need to access their counterparties and liquidity venues and so on. So for the buy side, which creates the order, they need to have access to the sell side, the liquidity venues, clearing and settlement firms, market data vendors to make decisions on their trades. So connectivity throughout the trade life cycle is one of the trends that they identified as being very important to them. The other things our customers identified were the need to access a ready-made ecosystem of market participants. So hedge funds, they need access to their counterparties, their broker-dealers, prime brokers, liquidity venues, various trade lifecycle services, whether it's risk management applications, OMS, EMS applications, as well as they need to communicate with their institutional investors, pension funds and foundations and so on. And when we talk specifically relating to FX, what we recognized was that FX is particularly complex because there's a wide range of instruments that are being traded, not just the spot markets, but you're also seeing a lot of derivative products, NDFs, forwards, swaps, outrights, structured products, and so on. So it's a very complex market. And we also heard yesterday during one of the panel discussions from James Sinclair at Market Factory that some of the most interesting problems around FX are around market fragmentation and the need to access venues. And that's something we saw. In FX, the buy side needs to connect to the sell side as well as to the single dealer platforms, the multi-bank platforms, ECNs, dark pools, the broking systems, and so on. And again, the challenges in this market are particularly complex because there is no central marketplace, and because of the last look, there could be trade slippage, and you need to make sure you're connected to your counterparties. So the connectivity requirements for this marketplace are somewhat unique. So the two trends that really popped out for us was the need to have connectivity throughout the trade life cycle, and second, access to a ready-made ecosystem. Now, what we find is a lot of our customers, they're leveraging managed network as a service and a network as a service model where they can connect to markets on demand. They can get to liquidity venues, to their broker-dealers, to counterparties, to institutional investors on demand. And that's really enabling the execution of a variety of trading strategies. When we talk to our customers, one of the things we're seeing in a typical hedge fund, the communications infrastructure is fairly complex. There's a lot of internal collaboration within a hedge fund. If you look at especially the geographically dispersed people in a hedge fund, let's say it's a mid-sized hedge fund or a larger hedge fund, you have portfolio managers, you have trading teams, risk management, economists, everyone that's geographically dispersed. And the communication to execute on a trade and on your investment thesis, it starts becoming very complex, and many of these hedge funds are using virtual private networks to communicate between their portfolio managers and trading teams as well as risk managers. It was interesting for us to find out that the risk managers also have to talk to the markets, because for some of the more illiquid products and more complex trades, the risk managers don't want to depend on the pricing that's provided by the portfolio managers or the trading teams. used through mark-to-model models and so on. They want to go out and get dealer quotes to validate pricing, to make sure that the leverage limits and position limits are accurate. So there's a lot of communication from the middle office as well as the back office, in addition to portfolio managers and the trading desks that go out into the marketplace to talk to various liquidity venues and broker-dealers. The hedge funds also need to get access to market data and various trade lifecycle services to execute on their trades. And they're also talking to their institutional investors, the limited partner community, whether it's pension funds, endowments, foundations, family offices, and so on, as well as to funds of funds. So the communication model is fairly complex, and a managed network as a service can play a significant role. As I said, firms tend to use virtual private networks to communicate internally. They're also using financial extranet services and latency-sensitive trading strategies to go out into the marketplace. So we're seeing a wide range of communication strategies being deployed. I want to talk specifically about how managed network as a service plays a role in various hedge fund strategies that we talked about. So for global macros, which invest usually in who are doing discretionary trading and fundamental analysis, and some of the greatest currency trades in history have been executed by global macro funds. Mark Chandler, yesterday in the morning during the keynote, he talked about how Great Britain exited the European exchange rate mechanism back in the early 90s, and George Soros was able to capitalize on some of the pressure on the pound by shorting the pound back in the 90s and broke the Bank of England. And with him, his colleague Stan Druckenmiller, he also was able to buy British stocks and buy German bonds, because he knew that the German mark was going to be strong compared to the British pound, and the British economy would get better and better once they exited the exchange rate mechanism. So you've seen some great trades, but these trades involve a lot of market risk, a lot of event risk, and leverage risk. And you saw that 2 weeks ago when the Swiss scrapped their peg with the euro. A lot of leverage risk. The prime brokers came making margin calls, and many funds were in deep trouble. So again, risk management becomes very critical here, and making sure that there's communication between the risk managers and the portfolio managers become crucial. So this is what we find is that communication, collaboration, connectivity critical to the strategies of global macro funds. When you look at managed futures, the Forex commodity trading advisors also need to have connectivity to the markets, whether it's the listed derivatives markets, OTC venues, or the various trading platforms. Typically, they're engaging in systematic trading, so they need to have flexible managed access to their venues, and they have to make sure that their managed networks provide them with that flexibility when they access various platforms. We've talked also to our customers about market neutral strategies that depend on the spread between currency pairs. So typically you're buying the loser and selling the winner because you think that the trade is going to converge, and of course you're exposed to the risk that if it's the pairs diverge as a result of any kind of if the trades diverge, you're exposed to a lot of risk because of the leverage that you've taken. But again, you need to have access to information, connectivity, and communication to execute on relative value strategies. The keynotes, we heard about cross-asset class strategies, and one of the things that we've seen is market participants, especially hedge funds, they want to have access to a variety of liquidity venues, not just the FX trading venues, but also equity venues and fixed income trading venues, especially with fixed income trading venues also going more and more electronic as time passes. So firms that were long Swiss francs, short Swiss equities, and also long Swiss bonds, they would have made a lot of money over the last couple of weeks. And again, it highlights the importance of cross-asset class strategies and making sure that you're connected to the marketplace, not just focused on a single asset class, as we heard during the keynote this morning. Of course, carry trades are very popular. What we have seen in our customer base is a lot of the savings in Japan, it's looking for higher returns. So you're seeing a lot of long Australian dollar, short Japanese yen. It's a very popular carry trade just because of the interest rate differentials in that marketplace. we have the Singapore Exchange on our network, and what we're seeing is a lot of the Australian dollar, Japanese yen futures being traded in that marketplace to take advantage of the carry. I also wanted to talk quickly about the Chinese renminbi, which is a great exposure for it's a great exposure for foreign investors to China, and it's become the second most traded currency in the Asian time zone after the USD Japanese yen pair. And you can go directly through from RMB to various currencies. You don't have to go through the US dollar anymore. And what the markets are demanding is more and more connectivity to ECNs, aggregators and single bank platforms that offer the Chinese renminbi. We're seeing some demand based on the recent launch of the Hong Kong Shanghai Stock Connect back in November. So I wanted to just talk to you quickly about the role of a managed network as a service solution in all of this. Managed network services, it's not the same as outsourcing. It basically means that you're standardizing processes and leveraging industry best practices as opposed to outsourcing where you're really reducing costs. And deals typically are not structured over the long term, they're shorter term, whereas outsourcing deals tend to be long term. And the key difference between managed services and outsourcing is that managed services are measured on the ability to deliver target service levels, whereas outsourcing is more measured on the ability to reduce costs. So firms typically manage their processes better by working with a managed network service provider, and we're seeing more and more demand for managed network services just given some of the trends that I talked to within the buy-side community. So what does a typical managed network service do? It offers you access to a ready-made ecosystem of market participants, buy-side firms, sell-side firms, interdealer brokers, liquidity venues, market data providers, as well as clearing and settlement firms. And you also have flexible access to your counterparties and to an ecosystem. You need to make sure that the managed network service provider that you work with is focused exclusively on the capital markets and offers competitive service level agreements under a single master service agreement. And the strategies that the buy side is executing, there's a whole range of strategies. So as we all know, the FX markets is a 24/7 market. You can't not have access to the markets, and downtime could mean disaster for many firms. So you need to be able to have a business continuity planning and disaster recovery strategy, access your communication lifelines at any time, anywhere. And then you're also engaging in latency sensitive trading. You need to have access to a community of market participants, and you're also collaborating on a variety of strategies. So you need to have access to all of that through a single pipe and unified access across your strategies. And whether you're in the front office, the middle office, or the back office, you need to be able to get to all your communication services, and whether it's voice communications or electronic trading. So what a network that's capital markets focused, it offers you that all of these services through a single pipe. And one of the key differentiators, and what does a managed network service bring you? It's it enables you to focus on your core competency of alpha generation and capturing liquidity, whereas you don't have to really focus on technology, because as a buy side, your real focus is on generating alpha and getting best returns for your limited partner community, and focus on executing all your different strategies. Take advantage of industry best practices. Risk management critical, especially because many strategies are exposed to leverage risk, market risk, event risk, and also are dependent on position limits and leverage limits. It also ensures that you're able to keep ahead of technology obsolescence, because the business of the buy side is on executing trade strategies and generating alpha, not on focusing on technology and connectivity. And of course, reducing capital and operational costs, not as important, because I was talking to some of you yesterday. Your focus is really on generating alpha, not on reducing costs. But that is another benefit that you can get. A quick overview of some case studies within our customer base. Singapore Exchange, we have an ecosystem with the Singapore Exchange of various dealers, the buy-side firms. And as I mentioned, the carry trades, we've seen carry trades with the Australian dollar, Japanese yen executed through the Singapore Exchange, and the exchange offers a wide variety of products. So that's an ecosystem that we have. Jeffrey is an example of a sell-side firm that accesses a whole range of market participants, whether it's single dealer platforms or currency platforms. Also, they're executing cross-asset class strategies through accessing equity venues and fixed income venues. And we're also seeing more and more demand for market data, and market data is driving the community, the entire capital markets community. And Thomson Reuters is a good example of that. Thomson Reuters delivers some of its electron feeds, as well as the FXall platform. You can access TradeWeb, a whole range of platforms through the Thomson Reuters network. And what we are offering is connectivity to the electron feeds, and there's a whole community that's benefiting from that, whether it's hedge funds, prop shops, endowments and foundations, asset managers, energy firms, corporate treasuries, insurance companies, retail banks, and so on. So there's a whole community of market participants that's benefiting from the variety of instruments and the market data that they're getting from Thomson Reuters. So what I wanted to really convey to you today was how a managed network as a service solution and how connectivity can empower capital market participants, not just in what global macro funds are doing or managed futures, carry trades, or relative value strategies or cross-asset class strategies. There are firms that are multi-strat, that are executing a whole range of strategies, trend-following strategies, counter-trend strategies, as well as volatility arbitrage. All of them could benefit from having connectivity to the markets, because what hedge funds need are a whole range of connectivity, not just maybe latency sensitive connectivity. Their strategies depend on the type of connectivity would depend on their strategies, and they're looking for a whole range of connectivity strategies to execute on a variety of trading strategies. And a network as a service model is an enabler to make that happen. We've been talking to you for the past day and a half, and it's been quite interesting, the discussions at the booth. And our team is here, so during the omelet bar mid-morning at 10:30, feel free to talk to our team and just learn more about how connectivity plays a role in the marketplace and how you can benefit from a managed network as a service solution. Well, thank you very much for your time today.